kind of conventional monetary policy and interest rate cut probably would be, it's the least priced when you look at rates markets. So it would have the most dampening effect on the euro exchange rate. However, how much they're willing to do that and step further into the kind of unknown of negative interest rate policy is quite undecided. I think most of the markets still expect, an increase in PEP or additional APP, and that to kind of, incrementally make ECB policy a little bit more dovish than the rest out there. But, when you're at kind of globally the lower bound, and when, central banks internationally are easing policy and kind of pledging to do so, it's a question of actually how much bang can you get for your buck in terms of central bank dovishness affecting currencies.
Eimear, I want to ask about financial conditions. So far, financial conditions have remained pretty stable. And of course, this week we have seen a massive sell-off in equity markets, and there are concerns around the virus and the restrictions being imposed across Europe and what impact this may have on the economy in Europe. But do these new lockdowns lead necessarily to a worsening in financial conditions?
I think now is a really good test run to see actually how that plays out. I think we've had, a very sharp market reaction this week, with more nationwide restrictions coming in, both in terms of Italy and France, and then just yesterday, obviously France and Germany nationwide lockdowns. So it is a question of, how much that kind of market optimism is going to be undermined now. We've obviously seen equity markets put in a relatively good performance up until this point. Saying that there just seems to be, significant demand for bonds. We've obviously got very depressed yield levels. So, do they really need to increase, PEP at this point or APP, or is this more a question of just keeping equity markets going?
And just to come back to the euro as well, we talked about the impact of potential further negative rates in the future and what that could do to drive the exchange rate. But at this point, is the exchange rate even in the ECB's hands, or is it being driven by other exogenous factors? And of course, we have the US elections coming up next week. That's going to be a big driver of the US dollar. Do you think that the ECB's hands are tied here and they just have got to see what plays out in the next couple of weeks before becoming a bit more proactive on that front?
Yeah, I think absolutely. In some way, they're just taking the exchange rate as an input. They, have only a limited degree about how much they can affect it, and definitely the US election and what kind of happens now that we have more severe social distancing restrictions coming into play, which is probably why they waited until December to see, what happens with the euro, and also what happens in terms of real indicators into the economy. Are these nationwide restrictions in France and Germany, are they going to be extended further? So far, we've been given kind of a 4-week timeline. So I suggest kind of in the December meeting, it's a much better vantage point for the ECB to step back and to see what kind of financial conditions they're facing and also how the economy is holding up.